Options trading is one of the keys to being a successful trader during a bear market.
Where are those keys, Rose?
So far this year, I made over $10,000 in profits, doubling my money, while the S&P 500 has dropped by more than 20%, putting us in a bear market. So in today's video, I'm going to be giving you 6 tips on how to stay consistently profitable in a bear market. The first tip that I have to survive a bear attack, wrong video. In order to stay profitable in a bear market, you need to not bet the house. A lot of new traders get really excited after seeing a couple of big wins of maybe 100% or even 1,000%, and then they decide to go all in.
$350,000? That means if we won again, it would be 12.25 million.
We could save the town and be super rich. Oh, hell yeah, let it ride. Let it ride. Yeah.
2 red, you lose.
And the problem with this is most of these traders are used to trading stocks, and the likelihood of a stock going to zero is relatively low. But with options trading, you have a decent chance of the option that you bought going to zero and losing everything that you put into your trade. So if you're risking your life savings on a single trade, that might go to zero faster than you think. If your option expires out of the money and you bought that option, then that option is completely worthless at expiration. So that's the risk whenever it comes to options trading. So we don't want to bet the house, and instead we want to keep our buying power relatively high. We can think of this kind of as our ammo. And in order to win the war, you need enough ammo in order to fight. If your army runs out of ammo, then you stand no chance against the opponent. So you want to keep a high buying power. I usually only use maybe half of the buying power in my portfolio. And you want to continue to add fuel to the engine. If your car runs out of gas, then you can't go any longer.
Paris Hilton, she has a $200,000 Bentley, and it ran out of gas.
Hey, you totally out of gas?
Yeah. But if you keep adding money to your portfolio by taking whatever income that you have and putting that into your options trading account, then you have more to work with. And again, we want as much ammo as we can. So we don't want to bet the house, we want a lot of buying power. And my second tip for you is to diversify. Whenever people are trading, they tend to be narrow-minded. And I've had this problem in the past during June through August to where I was losing money for those 3 months. And the reason for this is because I kept betting on the markets coming down even though they kept going up. Had I put on a couple of bullish trades, then I would have been able to make at least some of my money back. But since I was so narrow-minded and focused on the bear thesis, I continued to lose money for a few months. And in September, I started to diversify into both bullish and bearish predictions at the same time. And a few other ways that you can diversify your account is to take on different expiration dates. So you can add leaps, you can trade weekly options, and then adding a couple monthly options doesn't hurt. And it's also important to throw in a neutral trade every now and again, even though the markets are crazy volatile and it could work against you, but the markets sometimes can trade flat if there's price discovery going on. So take advantage of those times by using iron condors and iron butterflies and have your options account diversified into multiple directions and multiple expiration dates. And this kind of ties into the next tip that I've got for you, which is to keep an open mind. Stubbornness will get you killed in this market. Like I said, during June through August, I lost a bunch of money.
Oh man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you.
Because I was being narrow focused on the bear thesis, and I didn't want to stray from that. And it's really hard to tell if you're right at the wrong time or if you're just flat out wrong. Whenever the market started to come down in September, then I started making money on those bearish trades. So I was just right at the wrong time during June through August, but I could have been completely wrong, and the markets could have kept going up in September, October, November, and December, and I would have kept losing money because I'm so focused on the bear market. And the sooner that we can realize that we're wrong, the better, because that means that we can cut our losses short instead of taking our max loss on the expiration date. And at some point during your trade, it's likely that you're going to be correct. Because of how quickly the markets have been moving due to the high volatility, at some point you're probably going to be at a profit for that trade. And it's all about knowing when to get out of that trade. And this ties in with my next tip, which is creating an exit strategy. We get excited about entering a new trade because it's this brand new idea. We think that it's going to work perfectly well. but then we don't have a plan to get out of that trade. So we need to set this up, and we don't have to do it in the beginning of the trade, but we want to do this before our expiration date. And the whole goal is to cut our losses short and let our winners go up as much as possible. And the way that I exit my trades is based on probabilities.
Hey, seriously, is this safe?
Yes, very safe. 50-50.
50-50, what, like 50% we live, 50% we die?
Yes.
I assign my own probability that the trade will work out or it won't. And I monitor this on a daily basis. And I use this probability that I'm setting in my head to create an exit plan. If I think that there's a 50-50 chance of this trade going against me, then I'm going to set a limit order accordingly. If I have, say, a $1 spread and there's a 50-50 chance of this trade working out or not, then I'm going to set a limit order at 50 cents or 50% of that spread width. If I think that the trade is going to go against me and there's only a 20% chance that this trade is going to work out, then I'm going to set a limit order for 20 cents or 20% of the spread width. So this is how I exit my trades. I'm monitoring this every day and assigning a new probability, and I use this to cut my losses short from the max loss and take my profits as soon as I can. So really, exiting my trades for me is a lot of mental gymnastics, assigning probabilities and getting out of the trade, but you don't have to make it like this. You can set up stop losses, and this can be an easy way to get in and out of your trade and not take your max loss, or you can set take profit goals, and this can be equally as effective. And the fifth tip that I got for you is kind of out there. Unlikely trades in this market are actually more likely, and the reason for this is because of the high volatility. We're seeing 2-3% swings per day, so you can open an out of the money put debit spread that's 3% below the current market value, and you could still make a lot of profit on that trade. Whereas if volatility weren't so high right now, that would be a less likely trade to take on. But because of this higher volatility, this makes unlikely trades more likely, which means that you can take on riskier trades. But again, we don't want to bet the house. We don't want to put a lot of money down on these unlikely trades. I made a video about position sizing, which you should definitely check out. But the way that I do this is by assigning a grade to the trade, and I use that to allocate my risk accordingly. But these higher risk trades and the volatility can make for outsized returns. With these trades, I've been able to make over 100% profit sometimes, but most of the time this is usually between 30 and 50% profit. So it's still really good returns on what would be an unlikely trade. And finally, the last tip that I've got for you is to always be learning. Even at this point, 3 years into my trading career, I'm still learning something new every day. I'm always trying to improve what I can.
You smart. You very smart.
Like I said, I improved by diversifying my options positions in September versus being all bearish June through August, and this made me $6,000 for the month of September. So now I'm continuing to diversify my positions, and I think this will benefit me a lot. And I keep track of all this with a very detailed spreadsheet. Each month I'm adding something new to it. Like last month I learned that whenever I hold an option into expiration date, 75% of the time I would lose money on that option. So now I try to avoid holding my option into the expiration, and this is a continuous learning process. So always stay learning, always be mindful of what you're doing, what works and what doesn't work for you, and this will help you become a more consistently profitable trader, even during a bear market. Hopefully you found this video useful. Thanks for making it all the way to the end, and thank you to all my patrons for their support. And as always, remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.